welcome back to Watching Business Incorporated on Channels Television. We head to the markets now and see what's going on right there, especially looking at the NGX. Now, the number has been known. Everybody was waiting for the Fed's cuts. They've cut. It's 50 basis points. Let's see how markets are reacting. It doesn't seem to be very good for the NGX, but we cannot directly link that. As you know, the NGX does not directly respond to all those data. We could say it's profit taking after 2 sessions, positive sessions, in the market, but we're still on to 98,000. So that's a bit of hope right there. 98,162.06 now, down 0.07%. Who knows? There may be a recovery before the close of trade. For South Africa, it's however in the green, 1.26% in the green at 83,758.44. Let's look at other parts of Africa. Egypt is positive this afternoon, 1.20%, 30,706.98. While for Kenya closed yesterday. That's the Nairobi Stock Exchange. Your share index closed in the positive on Wednesday, 0.67%, 107.27. Let's look at other parts of the world now. I think the big country at this time. Middle East is green, 0.79%, 4,424.87. That's for Dubai. Abu Dhabi also green, 9,443.32, 0.22%. Other parts of the Middle East, the Tada War and Qatar follow suit. We can see green market right there in the Middle East. Now, before we move outside of this, let's see what's happening in Nigeria. Perhaps we missed the factor, or the U.S. Fed cuts factor right there. I don't know, but Vincent will tell us. Vincent Oshoma, a securities dealer and acting managing director, Midpoint Capital Limited, joins us from Lagos. Hi, Vincent. Good afternoon.
Good afternoon.
Can we safely say that the U.S. Fed cuts has no impact on the Nigerian market? Can we safely say that?
Yeah, currently you have not seen much impact, but we expect to see impact as things goes on, because once we see a rate cut, definitely it means that investors in the U.S. market start looking at alternatives. Nigeria presents a good alternative when you look at the opportunities in our market. So, and that depends on other factors around FX stability, and that will see how much we see them contributing moving into our market.
So for now, we can say there's not. But I mean, the other issue is, I know at least for Lagos and many states of the country, we've seen a kind of stability in supply of petrol, at least. Dangote has been in the news for months now. I don't know if this is the end of it or we have another shocker coming our way. But some people have connected import crude, or even import of refined products with the issues around Dangote and the demand for FX. Do we see that as a prominent factor at this time, talking about the connection, energy security, and the demand for FX?
Yeah, definitely there is a strong connection between the energy security in terms of fuel importation and FX, because when you look at it, about 40% of the FX demand is for energy importation. So with the arrangement of, with the upcoming of Dangote Refinery, I think that will bring stability in terms, because the demand for FX for the fuel importation, that can all be used to service other demands. I think it will definitely help in achieving bringing stability to the FX market, which is also very important for our market. That's why those are some of the things that investors will be looking at. Now the Dangote Refinery has started producing, and so as things stabilize in the area, which we have seen in terms of supply, definitely improve supply, brings stability, and brings stability also to the FX market, which is definitely, in fact, a lot of sectors in Nigeria, especially the equity markets.
So, I mean, this is actually connected to the Naira. We saw the previous session, the Naira lost about 7%. At the close of trade yesterday, it gained about 7%. But I mean, we can safely say that's connected to the intervention, from the central bank. Are we at a stable place now when we talk about the demand and supply pool of the FX and the value of the Naira?
I think, first of all, the things that we focus of the CBN and also a lot of persons is more about stability not the kind of volatility we used to see in terms of the FX market. Definitely, we still have some challenge in terms of the level of supply. But I think these issues that we have mentioned will start kind of bring stability into the market, because when you look at the fact that last month we saw the dollar bond, the success of the dollar bond, and that's quite important for the market, and also the issue of FX for importation of foreign products. I think these are the things that people will be looking at, and that can help in bringing some level of stability before we now see the improved supply. Because I think the first thing is to avoid too much volatility in the market, and these are things that will help that.
All right, Vincent Oshoma, thank you so much for your time and your views.
Thanks for having me.
So let's see the rest of the market now. United States stock futures jumped on Thursday as traders, of course, digested that Fed cuts. We see the Dow Jones very green, 1.12%. S&P 500 even better than that, 1.52%. On NASDAQ, 2% right there. Nvidia, of course, is still in the news amid shares popped more than 3% each. Micron Technology also traded about 2%. So a lot going on right there after that 50 basis point cut. Now let's go to Asia, where we also expected to react to the market. So it's no surprise that we see the Nikkei in the green, 2.17%, even though they are yet to regain that 38,000 level that they celebrated a bit ago. Kospi is also in the green, 2% for Hang Seng Index. And looking at other parts of the Asian market, I believe we'll have the Nifty also all looking green there. The Nifty, I beg your pardon, all looking green there, 0.22, and Shanghai also green. So everybody's happy that it was a bigger than expected cuts by the Fed. We hope that is sustainable for that market and others. And I'm sure also in the United Kingdom, which is like a brother to the United States, there's been reactions to that Fed cut. So, and I think eyes are now turning to the Bank of England.